Hi guys, Matthew here from Andrews Insurance Brokers. We're here today with Maher Attorneys, standing with Michaela and Robin. We thought we would dive into a little bit of the intricacies involved in buying your first property or buying a property in specific.
So a lot of clients approach us when buying a home or a property, obviously for insurance purposes, and especially first-time buyers are not really aware of the fact that you need to have a conveyancer involved in purchasing property. Can you talk us through what is a conveyancer and why do you need a conveyancer when buying a property?
No, it's a great question because, often the conveyancing and property transfer process is very new for people. The average person doesn't buy and sell all the time. And something that isn't really known is that you need a specialized attorney to assist you in a transfer, in a property transfer. You do need to utilize the services of a conveyancer. Property transfers and property law specifically is quite nuanced in South Africa. We are one of the only countries that has actually quite an onerous property transfer process. We have to go through quite a rigmarole and quite an extensive set of procedures to get a property formally registered in the deeds office. So this is something that sometimes sellers aren't really aware of. And then moreover, not only do you need a conveyancer, but in the property transfer process, sometimes you're not only just dealing with one attorney, but if there's a bond involved, which we'll probably get to, you find that you actually need also a bond attorney and sometimes also a bond cancellation attorney.
Michaela, you mentioned that occasionally you'll actually need two attorneys to help you through this conveyancing process. That sounds like it could be a little bit costly. Could you give us like an idea of how the costs are kind of worked out, whether you need two or one conveyancing attorney? And how could you also determine whether you're being quoted fairly, not overcharged, undercharged?
No, sure. This is something that we often find our clients aren't aware of at the beginning when they sell their properties or when they're buying. So your seller typically appoints your transfer attorney. And in instances where a buyer has to get a bond from the bank, what the bank will do is the bank will appoint a bond attorney. The bond attorneys are on the bank's panel. And then you find that, yes, you're working with two different attorneys. And sometimes if a seller has an existing bond over their property, during this process, they've actually got to cancel the bond at the same time. It all happens simultaneously. And in that instance, you might find you have three attorneys actually working on this.
Cheapest.
With regards to the costs, it's a great question because, again, buyers aren't often aware of it. So your transfer costs fall to the buyer. This includes your conveyancer, your transfer attorney who handles the actual registration of the transfer. The cost will have to be paid by the buyer, and as well as the bond attorney. So the bond attorney's cost will also go to the buyer. Usually the transfer attorney and the bond attorney's costs are quite similar in nature. We all work off a tariff. It's all the costs are all gazetted, and we all subject to the same tariff. And that tariff is worked out based on the value of the transfer, the value of the property being sold, and the value of the bond.
Now that being said, I know you said that it is a tariffed cost. One of the things that I didn't know when I purchased my first property was that you can actually ask for discounting. Is that an important thing to do? Are attorneys usually negotiable?
I'm probably going to upset a few attorneys out there. But look, you can discuss it with your attorneys. We are under strict regulations. We can't be seen to be touting. But if you have a good relationship with the attorney, if you're an existing client, you can usually speak to them and see if there is some margin to negotiate.
Continuing along the topic of the costings, when it comes to the buyers, they've obviously got to pay for their attorneys, and then they've also got to pay for transfer duties. What is transfer duties and how is that cost calculated?
Okay, so duties are basically a tax that's levied on the value of the property. So it works on a sliding scale, and you're quite right, it would be for the account of the purchaser.
Okay.
So there's a lot of costs for someone that's looking to buy a property must be conscious that there's a lot of costs involved. Is the transfer duties and the conveyances fees and all the attorneys that you have in the process, is that something that I can get financing for when I purchase my property, or do I need to have that cash up front?
So it depends on the way that your deal is structured, potentially with the bank. So some banks will assist the purchaser in including and assuming attorney's costs into the value of their bond. However, you must bear in mind that the transfer duty, that tax levied, that cannot be, it might be assumed into the value of your bond, but that money does need to be paid out before your transfer is registered. So you would need to have access to those funds and pay those funds up front, because your conveyancer, your transfer attorney, has to pay the transfer duty and get a transfer duty receipt in order to register. You can, further to that, you can actually get bridging finance. Some clients do it. Obviously, there's interest level on that, but there are businesses out there that offer bridging finance to assist the purchaser.
So if I'm looking to buy a house, I think probably some practical advice would be go on one of these property websites, put in the purchase price that I'm looking for, and get a bit of a calculation of the cost that I can expect, just to factor that into my budget. Because obviously, buying a home or buying a property is a major financial obligation. And there's more to it than meets the eye. So it would be a good thing for a purchaser to go and calculate those costs
Absolutely.
ahead of time.
And ask the question. If you're working with an agent, ask the questions. They can even put you in touch with an attorney, give them a call. I mean, we'd be happy to answer questions. Ask as much as you can to try to get that full picture.
And when do you initiate the process?
So it will usually come from, if you're working with an agent or if it's a private deal, an offer to purchase will be signed, an agreement of sale will be signed, and then it comes through our offices. And what we do is, that's essentially the inception of the process. Then we work off what is included in that agreement. We start to put together initial letters. We address everything we need, and we send it off to all the parties. And that's sort of the first.
So let's say I'm a prospective buyer and I've approached you guys. I'm ready to put my offer to purchase on the table. I wanted to just find out if I've had a look at everything. Everything seems great and well, but I can't really see inside the house any sort of hidden defects and stuff like that. Is there any protection along those lines at all?
Yes. It is an issue that we come across quite a lot. And I would say, just for practical purposes, it really is important for a buyer to remember that you are buying a property for strips, and that in a nutshell means you're buying it as is. And we could really get into this topic, and it can get nuanced and technical, and we can bring up different areas of the law. But I think just as a starting point, it's really important for a buyer to remember that. It is important for a seller, on the other hand, to make certain disclosures. They're supposed to, by law, fill out a disclosure form and obviously disclose what they're aware of. What we have found is that your buyer will move in, and then issues appear, and these are things that you wouldn't necessarily be able to see. Things like damp, issues with pipes, etc. Again, going back to the practical side of it, we would really guide our clients and suggest to our clients, when you put in an offer, include in that offer that it needs to be subject to a home inspection. At least that gives you an opportunity to go into this new home with your eyes open. Of course, in certain instances, you have recourse in the law, but it's not that straightforward. So just from that practical perspective, we would say, try get an inspection.
You've just spoken about offers to purchase. So again, I've found in my experience that a lot of people don't know that when you sign an offer to purchase, it is quite an obligation that you're undertaking. It's not just, making a casual offer on a property. There are legal consequences to it. So when I sign an offer to purchase as a buyer, what am I getting myself into, and what should I be aware of before I sign that offer to purchase?
So no, an offer to purchase is a very serious legally binding document. Both parties, both the seller and the purchaser, need to be well aware of the terms and conditions before they place their signature on that piece of paper.
Yes.
If they obstruct the process in any way after signature has been placed, or if they cancel, there can be various serious legal consequences and damages involved.
Okay, so you must be, when you're putting an offer in, you must be serious, because if that gets accepted, you're on the hook. And I guess the same would go for the seller. If they accept the offer, they can't then pull out and change their mind if they get a better deal down the line.
Correct.
Okay.
Right, so I've just signed my offer to purchase. I now need to get financed, but I have no clue where to start. What happens if I initiate that process and I can't actually get the finance, and I've signed my offer to purchase? You mentioned that it's quite important to be ready when you are signing that OTP. But now I need to get the finance, and I'm just worried that I might not get the finance. What will happen to me in that case?
Right. So yeah, if your OTP does provide that you do need to have finance or obtain finance, then it's your obligation to do so. You can approach banks directly, but what's preferable is to approach bond originators, and they will approach various banks on your behalf and find the best finance, the best deals. But you are obliged to do so. Otherwise, you can incur serious legal consequences. You'll basically be in breach of the offered purchase.
Okay.
So if I can just add on to what you're saying there, a bond originator will give me a nice spread in terms of comparisons, in terms of what the different banks will be able to offer, because obviously just even 0.5% or 1% over the next 20 years can make a huge financial impact in terms of what I'm going to be paying as the prospective buyer. So finding someone that can give me the best deal possible is an important thing. But it's important to make sure that when I do sign my offer to purchase, I'm including a term or clause in there that it is subject to me obtaining finance, or maybe even selling my existing home.
Yes.
Otherwise, it could have more serious ramifications.
Yeah, that's correct.
So we've spoken a lot about the buyer, and they seem to sort of bear the burden of a lot of the transfer costs. But let's just switch the roles around a little bit. I'm now the seller of the property. Do I also have to budget for certain costs and make provisions for certain things? And if so, what are those?
No, absolutely. There are some costs that the seller will incur. So some things that a lot of sellers aren't aware of is rates clearances. So part of the transfer process, we have to obtain a rates clearance certificate before we can register a property. What that means is we have to go to council, and what council does is it takes essentially a property's monthly rates and does a projection. In Johannesburg specifically, we do about a 4-month projection, and we get these figures and we send it on to the seller. The seller has to cover those costs in order for us to get a rates clearance certificate. At the end, once your property is transferred, you can get a refund from council, but the point is that you actually need that money up front in order for us to get that rates clearance certificate. So that is often a cost that some sellers aren't aware of and are often quite shocked that they get this, these figures from council and it's showing a 4-month projection. But that is quite common, slightly less in Cape Town, but if you're in Johannesburg, that's what you should really bank on. And then there are some smaller hidden costs for a seller. For example, often what we have to do is we have to appoint rates runners that go into council and obtain those figures. And that's usually a small administrative fee for them to get the figures. If you have a sectional title, if you're subject to a body corporate or a homeowners association, you have to get levy clearance figures, which is a similar thing. They do a projection up to a few months. You need to be able to pay those levy figures up front in order for us to register. And there's usually a small administrative fee that is associated with that as well. So these are some of the costs. And if you have an existing mortgage bond on your property, then what will happen is your bank will appoint bond cancellation attorney, and that cancellation attorney will then also issue you with an invoice. It is obviously significantly reduced in comparison to what your buyer is paying for a bond attorney and a transfer attorney, but these are costs that sellers need to be aware of. And various compliance certificates, so electrical compliance certificates, and gas compliance, these are things that sellers need to be aware of. And of course, which I'm sure at the time they would be aware of, but if you have an agent, obviously, your seller pays the agent's commission. It comes out of the purchase price.
Right. So, Matt, talking about the insurance side of things now, a lot of my clients in the past, when they've purchased a property, they've been under the impression that if I'm in sort of financing that property through a bank, that I need to also insure the property through the bank. I don't really have a choice of where that insurance goes. Is that correct? Do I have a choice as a buyer?
Definitely a popular misconception. A lot of our clients do bring that objection to us as well, and that's definitely not the case. You've got to sort of comply with the certain requirements that the bank needs for information to be stipulated on your policy schedule. But yes, 100%, you can take that building, put it on to your other policy that's maybe covering your vehicles, your contents, and everything else you might have insured. But yeah, you can definitely remove it from the bank, put it onto your own portfolio, and manage it like that.
So if I have a preferred insurance provider, I can put it on my current portfolio, and then I would probably also benefit from things like discounting. If I'm already insuring my cars, my contents, other assets, I'd probably get a good discount and a rate. And I can also use my one preferred insurance provider for all my queries. I don't have to deal with two different insurance companies.
100%. And something that's also not really seen in the market is the minute the clients are putting on their buildings, because that asset holds such big value, it opens them up to more specified sort of products if you're looking at like an executive level, which comes with better rated structures, leading to a nice influence on helping you in terms of affordability and everything of that sort.
One of the things that we would obviously advise as financial advisors is that when you purchase a property, the best thing to do is to get a professional insurance valuation, not a market valuation. That's a different thing. The insurance valuation would be the rebuild cost, everything from the materials of building the structure with new materials and finishes, but also things like architects and municipal fees and those sort of hidden costs in building a property from scratch. And if the buyer hasn't insured their property correctly and a major loss occurs, they can really find themselves in a financial shortcoming. Now, one of the other benefits about insuring through a broker or specialist insurance provider is that some of those products would come with a valuation that you would usually have to pay for. Is that the case? How would that work exactly?
Most definitely, Sean. A lot of the insurance companies have started embedding the cost of a valuation inside the actual product and client's policy, meaning if I place my building on that policy, the insurance company will send out professional valuators to do a whole sort of walkthrough of the property and provide us with a professionally written up valuation report that we use. They do take into consideration certain percentage ranges of your professional fees that you might expect as well. So it just gives us a much better idea of, God forbid, something had to happen to the building today, total loss, we know that we covered correctly and that average clause won't apply to us.
So there's certain products, right, that will include a valuation service, which is great. But then if the product that I qualify for doesn't have that benefit included, I've got the option of paying for a valuation, bearing in mind I just had to pay for a whole bunch of costs in purchasing the property. It might not be financially feasible. If a client doesn't have that access to evaluation, what is the next best thing that they can do in terms of calculating the property price? Because it's very important not to just insure it for what you bought it for. The market value and insurance value are two completely different calculations and two completely different things.
So in those cases, I generally ask the client two questions: square meterage and cost per square meterage of the build. That kind of gives us an indicative rebuild value. I mean, just to give you an example, if we're looking at a more high-end building, you would be looking at a cost of 15 to 17,000 Rand per square meter. If your building's sitting on 400 square meters, times that square meterage by the cost per build, depending on what level you believe your building is made up of. And that does spit out a figure that we can use and we can put on file. Most of the time, it would work out to be quite a blanket sort of way of getting to that real value, but it does protect you a little bit further than just taking the sum insured or the value of the building that your estate agent told you, or the purchase price of the building.
And I think it's very important to note that you said that you're calculating the building cost of the main building, but what a lot of clients tend to forget is that it's not just the main building, it's all the infrastructure on the property that you're purchasing. So that would include things like your boundary wall, driveway, swimming pool, fish ponds, any built infrastructure on the land that you would also need to factor in when you're doing that calculation that you were talking about earlier, which is quite right. And then adding an extra contingency on for things like professional fees. You're going to need an engineer and an architect. You're going to need to get those plans signed off by council. There's going to have to be rubble removal and site clearance. So you're going to have to add quite a thick contingency on top of that to avoid average and under insurance being applicable. But the best thing to do, I think, ultimately is get a valuation. It is a cost. It isn't something that people like to do, but it's something that we can, it's something that will save you big time in the long term.
Definitely. And the clients mustn't get confused about what products do offer this free of charge. They must look around. The guys aren't going to come back and charge you through the roof for it. It's all about consolidating the portfolio. Many of the clients have got it still with the bank, and that's the only reason why they haven't been given these types of benefits. So chat to the brokers. Let them have a look at your portfolio in full. And a holistic overview provides so much more value than just looking at a number and an asset and just trying to
one asset, as a single thing,
100%.
as opposed to
100%.
consolidating your portfolio. And also comes down to single points of contact, like let's just say you have a geyser burst in your roof and it damages your roof and you need to replace the geyser, but it also damages some of your furniture. Instead of lodging claims with two different insurers, you can have one point of contact with your broker and he'll take care of the building claim and the contents claim, which can really save you, a lot of hassle and frustration in the long run.
We actually have a question for you guys. Usually in the transfer process, specifically when there is a bond involved, the bank will request an insurance certificate before the bond registration attorney is allowed to proceed and in order for us to actually lodge and go ahead with the transfer. Sometimes, and it becomes quite a frustration from the conveyancing side, is that these insurance certificates can take quite a long time. Can you explain to us, should this be happening? Should it take so long? Is it a case of just having a good broker on board? Will that assist in expediting this process? And what should the buyer have on hand? What information do they need to provide in order to get these insurance certificates?
So in a nutshell, to answer your question, no, it shouldn't, in theory, take long. And definitely the broker's role would be to chase up insurers where the insurers need to draft the certificates. So just to give you an idea, most of the time, sometimes financial institutions will accept a broker-issued letter that confirms cover, specifically when you're buying a vehicle. That's quite a common thing. However, sometimes with properties, they don't accept broker confirmations. They actually want a confirmation with a mortgagee's clause, because the bank will have specific insurance requirements, specifically if you're going to your own insurers, to protect themselves. So they would want an insurance-issued letter. And the broker is then, at the mercy of the insurance company and how quickly they can issue that letter. It comes down to a good broker sort of chasing that up to make sure that it doesn't hold up the buying process. But it can happen, and sometimes it's not necessarily the broker's fault or the buyer's fault. If you are arranging your own insurance, it's very important to understand what the bank will require to make sure that whoever your chosen insurance provider can meet those requirements. Because also what we've seen in the past is that a buyer will have their own insurance. They'll issue a certificate. Either the certificate lacks certain information, and then it has to get sent back, and we start all over again. So it's important to have that information on the certificate and make sure you understand what the bank requires. Sometimes the banks are very specific, which is great for us. Sometimes they just ask for a certificate and then it ends up being a back and forth, which can delay the process.
If we were working, with a client and they had their policy with Andrews, would it be possible then from our end to just give you a call and say, look, this is what we need, this is what the bank requires, and are you able to help us expedite that process? Because often we find in the conveyancing process, it's one of the things that holds a transfer up, and it can be extremely stressful, obviously, for all professionals and all parties involved.
No, most definitely. I think Matt can talk about it a little bit, but all of the insurers that we deal with definitely have bank-approved products and meet the minimum criteria.
No, definitely. And a counter question from our side back to you. We've had it quite a few times where it's the transfer that takes a little bit longer than expected. And from our understanding, we'll insure the building once it's been registered onto our client's name. Mm-hmm. Is it a requirement sometimes that you guys would need to see a confirmation of cover for that building prior to it actually being put onto the guy's name? We do have ways and means we jump around that and we get it sorted for the client, but I thought it would be an interesting question to bring up.
That's typically what your bond registration attorneys are dealing with, and depending on the bank and what they require from that certificate, they may require that exactly, which is that confirmation of cover and noting that specific bank's interest.
Because how I usually handle it is I would future date the start date if they've got an expected activation, or they expect that on the 1st of October the house is going to be actually put into their name. We could always go 30 days behind, put the confirmation of cover to state that we're starting on the 1st of October, just to show it to the bank so that they can finalize their whole transfer process and actually get it onto the client's name. It's interesting.
So thanks everyone. I think we've covered the main basis about buying a property, and if anyone is looking to buy or sell their property and they need conveyances, please look up Maher Attorneys. And of course, if you're buying a property, come speak to us at Andrews and we'll sort you out with cover and make sure there's no delays on those insurance certificates.
Amazing.